to week 2 of the sales part of these engagements. And today I've got great pleasure to host 2 individuals who have walked down this road that many of you are going through. And we are hoping that we'll get a little bit of insight into what that journey has been and what are the kind of things that they have had to look out for. And might there be any lessons that you guys can pick up from listening to the experiences? So by way of background, this is specifically for Karanja and for Fred. This month, over the next 3 weeks, so we started last week and up until the beginning of September, what I've been taking the guys through is basically building the muscle to sell not just their product, but also their company. And this week we'll be touching a little bit on the psychology of sales, which is more around the science of sales. But we'll be touching also on what we are calling the anatomy of a pivot, really being able to switch around not just your products, but even your approach to market. And I'm sure you've probably gone through this in the course of your careers. So by way of introduction, I'd first like to introduce Karanja Macharia. Karanja Macharia is a software developer and entrepreneur with over 25 years experience in the market across in this market here in East Africa. And he's been a founder and co-founder of various diverse ventures. And probably the most famous one that he's known for is Mobile Planet. And this he went to, the day when this was not even a thing. So, and he's been able to divest out of that. And we say he's now in semi-retirement. He'll tell us what that is like. So a great innovator, strong business acumen, and also a good friend of mine. I'm glad to have him on board. So Karanja, welcome. We also have Fred. Fred Michuki is a co-founder and managing director of MFS Technologies. And MFS is a financial services solutions provider, and he'll tell us about all the different things that they do. But I think more importantly, he took a huge kind of pivot in his own career. He was a banker for many years. That's how I knew him. His career, basically his last job, he was heading public sector in Standard Chartered Bank. But now he's into technology and using technology to bring products closer to the masses. And possibly very interesting for you guys is that he's also the principal officer of InsureMe KE, which pushes out insurance products into the market on the back of digital platforms. So again, welcome, Fred. And I think this will be also an interesting journey to speak to you about. So what we'll do is that I'm thinking I'll post a couple of questions to you guys just to kind of set the stage. And then we'll open up the floor for questions from everyone else. And then basically that will be, hopefully wrap this up by 6 o'clock. So give everybody back some time in their evenings. So guys, sorry, let me just make sure that I can see everyone. Fred and I can see online. So maybe you guys can wave. Fred and Karanja, welcome. Thank you. And so maybe we can start with a kind of background question, and maybe this will go to, we'll start with you, Karanja. Just give us, just the highlights of your career so far and how you ended up where you are now.
Okay, thank you, Andrew, and hi to the cohort. Like you said, a software developer by training. That's what I went to school to study. Came back to Kenya and started doing a lot of freelance software development. Just building stuff for companies, for individuals. Nothing really very structured, but just freelancing. And then from that, my brother, a company, was one of the first insurance premium financing companies, I think, on the continent, for certainly. So went and built the system for them for that, which then morphed into an insurance platform when they converted their company into an insurance company for PSV. Branched out on my own, started the company that you said called Mobile Planet with my sister and a friend of ours. And primarily what we did was build software for mobile networks. And at the time of exiting, we were in 65 different mobile networks in Africa and Asia. And the last few years have basically been, as you said, semi-retirement, but also doubled a bit, actually, with my friend there, Fred, in some business in the gaming industry, played around with a few things. And now, basically, I call myself a full-time dad, raising 2 young girls, and trying to figure out how I can build a company around tech to help me do that. So that's currently what I'm.
Yeah, I think that will sell for sure.
Oh,
if
yeah,
there was a manual for
absolutely.
children, yeah, that will definitely sell.
That's very
so
true.
Fred,
yeah,
give us a little bit about your journey so far. You're on mute, Fred. There we go.
Thanks. Thank you, Andrew. Karanja, good to see you here. So as Andrew has mentioned, I'm a banker by profession. Spent most of my life, in financial services, and somewhere around 2012, a couple of guys who today, I guess, are directors and shareholders of our company called MFS Technologies got together and started thinking about solutions around mobile lending. This is way before there was any Mshwari or any of those other products that we hear about in the market today. Long and short of it is that we started a company, developed some technology, which we licensed to various financial institutions in the market, some of the larger banks, and also we've worked with the telcos, continue to work with them until today. As a result of starting off on that sort of like pivot in mobile lending, then we started expanding sort of like our product, mainly focusing around financial services. So we went into payments, gone into mobile banking, gone into agency banking and things like that. And more recently, over the last 3 years, actually from the COVID period, also going into insurance as well. Our main focus really is developing technology that connects consumers to businesses. And so we try to take away the pain of anybody who's looking at trying to offer services to their clientele, mainly around the retail sort of like market and mass market. Try to provide them with a technology that enables them to do that. So connecting them with their businesses, and of course, providing the supporting infrastructure around that. We've got a data center. So we also host applications for people who don't necessarily want to invest in the capital to host their solutions. So by and large, that's what we do. We provide financial services to a cohort of people in various industries. And for me, as as a career banker, let me say that the last actually I started on a permanent basis towards the end of 2017, maybe the beginning of 2018, and I left the bank to run the company on a full-time basis. And it's been a steep learning curve, no doubt about it, especially when you're heading a technology company and tech is not your first sort of like, it's not what you've been doing all your life, but it's been an interesting journey. I'm sure we'll get an opportunity to discuss it as we go along. Thank you.
Thank you, Fred and Karanja, for that. And so maybe as I mentioned earlier, this is really about selling, this engagement that we're having over the next few weeks. Would there be one thing that you would say, and I'll put this question out there, and either of you can answer and one can take over from that, but we'll just keep it open. Is there one thing that you would keep in mind when selling technology, and what would that be? And you can take this from any aspect. You're either selling your products, technology products, or you're selling yourselves. You're basically your company. You're out there looking for partnerships. What would you say that you have to keep in mind?
Okay, I'll pick it up. Like I said, I'm trying to start a new company now, and what I've done over the last year is just go through the journey, just go through in the entire journey and look at what would I have done differently, what did I get right, what mistakes did I make, and being a techie, I think one of the biggest things that I've learned, and I think you need to keep in mind when you're selling, whether it's direct to consumer or to a business, is people really don't care about the technology. You know, they really care about to do for them. How are you going to help them? Okay, and I think when I look at even how we used to sell before, it was all technology focused. It helped when we were in mobile networks to a certain degree because the engineering teams would get involved, but we ended up selling better to the marketing teams when we would talk about the benefits they'd get. Okay, so something I've been trying to unlearn in a way, because being an IT guy, it's easier for me to talk the tech part of the business is really talking about what the benefits are and what it's going to bring to the consumers. And something that I've found that has really helped me with this is this theory called jobs to be done, which I recommend to people when I talk to them now about thinking in terms of the customer first, and what's your technology, what job is your technology going to help the customer to get done. So for me, that's the thing to really keep in mind is understand the audience you're selling to. Yeah, if it's to the executives and stuff like that, the technology really doesn't. They're not that interested. That's what I've found in my experience.
Yeah, thanks.
Karanja, Fred. Yep. Go ahead, Fred.
Can you hear me? Yeah.
Yes.
Yeah. So thanks for that, Karanja, because you've taken actually the words out of my mouth. Again, what I've come to, I used to think, if you build it, they will come. But that actually is not necessarily the case, because one thing that I've had to do over time is to divorce what my expectations are or what my grand plans are with the reality on the ground as to, first and foremost, is there a problem to be solved? Is there a problem to be solved? Because technology, as far as I see it, is simply a channel, all right, that enables something to happen. You're really trying to take away any friction that might be there in an existing kind of like process, and maybe you layer it with technology to solve for an existing problem. But if there is no problem to be solved for, then one could end up actually headed off in a direction of continuous development and building of solutions that maybe have no applicability. So the greatest takeaway for me is, do you understand who that customer is in the first instance and what their needs are, and then develop something around sort of like their pain points, and then deliver that. And once you're able to have a conversation with potential customers, if you will, I mean, of course, you generally have an idea of maybe what it is that you want to develop, but the whole point is that even before going too far in that development, it's so important to get that necessary feedback from customers to see, are you headed in the right direction? Is it something that is really viable, and so on. And the example that you can give today, it's unfortunate because it's I mean, but it's what's happening. You can see what's happening in the tech industry with regards to FMCG today. So we've got a lot of companies that have raised quite a lot of money from offshore, coming to try to do some distributor or supply chain financing on the ground, right? And a lot of money has been spent there, but you find that for one reason or another, there's a challenge. So there was that thinking. that let's put technology in place of the local wholesaler, for instance, and then something will grow of it. And yet you can find that maybe that's not necessarily where the pain point was. So again, do we understand the customer's needs? You develop around the customer needs, you build a solution around the customer needs, and then grow it out from there. Yeah.
Thanks, Fred. With your background, I think that because you are not in technology, that may have been easier for you than most. I don't know if that was your experience, because you're coming in from the other side of the desk. People would come and try and position stuff to you. I don't know what your experience has been as a non-technology person now playing in technology, or did you immediately find yourself selling bits and bytes and sizes and speeds and things like that?
Well, I mean, let's just say that, yeah, coming from a non-tech background it's had its positive effects, but it's also forced me to unlearn. Let me put it that way, because if I say that I'm putting on, let's say, the customer hat, for instance, and then you just think that developing or building applications is something that can be done overnight, and there are processes to that whole. There's a process that must be followed. It's not that you just give instructions to your developers and say, because I had a conversation with so and so of this company and they said that they've got this issue, then can you build it? You understand? There's the whole thought process behind that. There's the whole documentation around that solution. There's the whole architecting of that solution, and then there's the iterations. I think it's Karanja who taught us a long time ago. You go baby one step at a time, and then from there you learn. Because you don't get it right the first time, isn't it? Then you iterate from there, and you continue building slowly until you get to even it's like a MVP, isn't it? A minimum viable
prototype.
Yes, kind of like a prototype. But of course, in my mind, when I came into the technology company, even though we owned the company for a long time, I wasn't really involved in the day-to-day until I came in, and I just thought it was like the way you just download video games today, isn't it? You just go to some whatever and you download, and then you can. No, there's actually a whole process, and I've learned all these things about technical debt. You can build some things, and then 2-3 years down the road, you can't scale it. Its only purpose is to serve that one particular customer who you built around, and then now it can't move. You understand what I'm saying? Painful lessons to learn. So yes, there's a positive side of coming from a non-tech side, but there's also the discipline around developing solutions that I've also had to learn as I go along. Yeah.
Fantastic. I think some great points coming out there. So one of the key things for this cohort is obviously partnerships. Many of them being obviously in the insurance space will either be looking to develop solutions that will support principal partners, be they insurance companies or other companies, or even different levels of that. And others will be producing, solutions that will impact the end user, at the end. But in all senses, they at some point will have to get into some sort of major partnerships. And both of you have done this, very successfully in the past. The first question I'd have for you for partners is, how do you zero in on the right partner? Because I'm sure there's also been horror stories of, tying yourself up with the wrong partner. Maybe what are some of those red flags? But what are the kind of things that even just going through your own experience that you would look out for when you're trying to come up with a partnership for your organization or your solution? Fred, maybe we start with you.
Okay, sure. So what's that ideal sort of partner? Ideally, you would want to work with somebody who is also on a sort of like journey, has got an open mind to trying sort of like new things, somebody who you can exchange ideas with. You're actually building each other, right? So on the one hand, perhaps it's technology that we are providing, but on the other hand, he's the one who's got the problem, and he's the one who can best articulate what that challenge is. And so you can build something that is meaningful, and again, something that can be scaled, at some later point. So that what you call the ideal partner or the right partner. I don't know whether that exists, because one has to go through many iterations before you can actually settle down and understand who you can work with. I'll give you a perfect example. So as we were heading into this insurance journey of developing some insurance applications, you would automatically think that because the big guys, right? The Britams, the Jubilees, the Sanlams, and so on and so forth. They've got resources, they've got technology companies, I guess. And so you would imagine that having a conversation with them would be easier. And you come to discover, actually, the ones who really want to have a conversation with you and who want to innovate with you and develop with you are actually the smaller local guys, right? The guy is hungrier, right? He's also looking to manage costs here and there. He's looking at technology as an enabler. And so, you know, it kind of like made me pivot. Instead of just trying to look at the bigger guys, there are also some people who are somewhere in the middle tier, even lower, who are looking to aspire to be as big as that big guy. So then can you start with him? Can you develop something with him? Build it. And, you know, once it starts working, obviously the bigger guys will sort of like, they'll start to notice one or two things. Secondly, again, I go back to this, if you build it, they will come. You know, so you could also end up with the wrong kind of partner who you're encouraging each other. You're all headed in another direction that only the two of you kind of like understand. But again, if none of you are able to take that step back and see, remember, you're working for, the guy treats you like a vendor. You're a vendor, you're sorting his problem out, right? But at the same time, you're thinking of building your company. You want this company to grow. So it's not just about building for this one particular individual, it's about building also for the larger market. So one has to be very careful not to get caught up in somebody else's aspirations as you develop and think that this can be applied to everybody across the board. So for me, I think I've come to respect a lot of the local sort of like companies and organizations that are looking to change the way they operate and how they work. You can have more meaningful conversations with them. It's more fulfilling when you're trying to innovate together with them. A lot of the bigger guys are so mired in corporate policy and so many other things that it's very difficult for them to shift. And I noticed that myself, of course, even when I came out of banking, I had to unlearn everything that I had learned in banking around policies, around procedure, around credit, and then apply it to this new segment or target market that wasn't really before. So I don't know whether it's the right kind of partner, but again, somebody who you can innovate and work with is what I would be more inclined to look at. Yeah.
Fantastic. I think some gems coming out there. You don't want to paint yourself into a technology corner with your so-called partner. I think that is, and I actually never thought about that, but that sounds like that can get quite messy. Karanja, anything to add there?
Yeah, I echo a lot of what Fred has said. I think clarity on what the partnership, what you're looking out of the partnership is very important. So when we were getting started with Mobile Planet, again, we were selling into mobile networks. So we did what Fred said. We went to the biggest guy, and at the time, the biggest guy was actually Airtel. At that time was Kensel. And we thought, go the big guy, and that's how you're going to get ahead. Like Fred said, they're very focused on what they want. They're talking about their own internal things. So we did a pivot kind of, and we knew somebody who was at then like probably like 50, 60 people Safaricom. So we walked over and we did the pitch, and they were looking to offer as many new services as they could, and we got signed up in 45 minutes. The greatest part is they turned out to be the biggest guy, you know.
The
so
big
that
gorilla.
was some luck. Yes, yeah, we had that was nothing to do with us. That was just the Kenyan market and the entry and how they did their entry. But what that did as a partner is we create they served as our reference site. So for me, it's look for a partner, whether even if they're small, that you can build up as a reference site. So when you're talking to everybody else, you're referring to that partner is willing to vouch for you, and that just gives you credibility. It's instant credibility because this is a competitor of theirs and they're saying this person has done X, Y, and Z for us. You've got to watch out also because immediately they started to grow now. What our thing is they immediately then turned around and locked us into exclusivity. So you've got to ask yourself, okay, so am I going to be permanently exclusive? Do I do it for a certain period? If I do it, what are the benefits? We ended up doing it for a period, which worked both ways. I'd say it was neutral at the end of the day. So understand what you're looking for from your partner and look for a reference site. So like actually one of the ways we got Safaricom is we offered the first service for free. So we had absolutely nothing to lose. We were like, if we get you on board, then we can go to your competitor and say, hey, we got them on board. So you may do a few things that don't make sense, but the long-term thing is get your reference site in, be able to say this is the person that we work with. Then as we grew, and the exclusivity broke, that now brought a host of other people. Because we had done quite well with Safaricom, that brought a host of other people onto the table. And then the partner for this second phase was now, how do we grow this company beyond borders? None of us had ever worked beyond Kenya's borders. So of the various companies that came along, Google was one of them, and what we saw in them as a partner, which eventually they became a shareholder, was basically they would open up countries to us. We couldn't do it ourselves. So again, just like with the Safaricom thing, we said, if we want to spread, the way you're going to do it is, we can't do it ourselves, the three of us. That time the company was about 30 people. We can't do it ourselves. We've never done that before. Let's go with somebody who's already global, who can get us into other networks, and we will benefit, and the rollout will be quicker. So we selected them as a partner because that's what they offered. So the key is figure out what's the partnership about. Yeah, if you're selling software into the insurance companies, like Fred is saying, go get all insurance company, and please them, like like offer them the services and that they're willing to be able to vouch for you. And it could be a case study or something like that, and that becomes your reference site. And then their competitors, you go and start selling to their competitors around, well, so-and-so, this is what we're doing for so-and-so. And this is the case study, and this is how they vouch for us. And that helps you now to grow within the industry. And watch out for those exclusivity things that they'll try and throw at you.
Yeah, it's always about looking for a real partnership. And I think it's difficult when you're starting out, when you're really in your infancy as a company. Ensuring that you're getting a good deal, a deal that works for both sides of the table. My last question, is there anything that you would probably have done differently in hindsight through your journeys so far? Is there anything that stands out that you think, actually, if I had known this, I would have done something different? Karanja, we start with you.
Oh yeah, there are many things, but you want one. Like I mentioned, I mentioned before that we started pitching to the marketing teams, which worked out very well for getting like signups, like getting the network on board and stuff. But we ignored the IT teams. And over the 14 years we ran that company, most of the IT teams in those companies really didn't like us, and it made other parts of the business more difficult to operate, and it also cost us some opportunities within the IT teams and stuff. So that's one of the things I look at and ask myself, okay, should I have involved IT from the very beginning? But that's probably something that, if I was going to start to sell into companies again, I would take a look at but that's just very high level. There's very, very rather many mistakes that I made. So, yeah.
Okay.
Yeah, I guess for me, it's hire slowly, hire slowly, hire slowly. You know, when I joined the company on a full-time basis, I had a lot of plans in place, but I think I was very theoretical in my approach and was really looking at things from a corporate perspective. What would the ideal company look like if we make sure that we have resourced in every single particular role that is required to set up a functional IT company? And so one of the things that I learned, especially during COVID and after COVID, and when Microsoft and Google and all these guys came to start poaching talent and paying them 2-3x times, and therefore, resources started scampering left, right, and center. That, in most instances, when you're just creating solutions and you're building them and to a minimum viable product as you're scoping along, you can make do with you don't have to have significant resources behind all these things. That's what I'm trying to drive at. And so as one builds their company and then you start scaling, that's when you can start adding resources on top of that. So I think I hired very quickly and very fast. I amassed a very big team of very expensive resources, so to speak. But then again, they need to pay for themselves, and getting the business on board is not easy. It takes a long time before you get a customer on board, and even before you start generating significant revenues or transactions to then justify some of these salaries. So, secondly, of course, paying close attention to what is happening even in other ecosystems. What do I mean by that? So, for instance, what's happening in FMCG? What is happening in manufacturing? What's happening in banking? What's happening? Those are all indicators that one can use to try and give them some bearing as to how your own business actually will be able to run. Remember, I said that technology is just an enabler, just a channel that connects from one side to the other. So that can also help one to understand how to position your company, how to resource your company, when to hire, when not to hire, when are the opportunities there. And so it's not just an inward looking kind of like it's a tech thing only. No, what are the other levers within the economy that also have impact on your business? So I think those are my two takeaways. Yeah.
Yeah. Thanks so much, Fred and Karanja, for that. So we have about 40 minutes to the top of the hour. 20 minutes to the top of the hour. So I'll open up the floor to the cohort to ask questions. And then let's see how many we can go through. So we have one from Jean. John, you want to go ahead?
Yeah, sure. Yeah, thanks. Sales always gets me excited, and hopefully
maybe a quick intro of yourself, where you're from, and your company, as you ask your question.
Oh. Yeah, sure. My name is Jean, and I lead the team at Quest Digital Finance, popularly known as Akelo Banker here in Uganda. And we provide digital infrastructure to SACCOs to manage their day-to-day operations and, of course, integrate mobile services. And Bionic was by then one of our instrumental partners in achieving all this, and now, of course, taken by you. So I think I have about 3 questions, but all they are almost tied together. So first of all, I would want to know the role of pricing in helping you, and with your experiences in helping you close business deals, and at what point do you actually compromise with the cost just because you want to get the customer? Because I've seen some instances where you just want this customer, but within their budget, you know that their budget does not fit the sale price that you have within your operations, but you know that customer is valuable. So how do you handle that without making this customer, because this customer is going to make reference to others, and most likely he'll communicate to them the price with which they bought or they took up your product. But also relating to that, it's really around the pivots of business models. So how do you pivot from one business model to another, but within the same client base? So you have your client, but you've been pricing this way, but somehow you know that that is not a sustainable revenue model and you need to switch it to a new one. How do you sort of introduce the new revenue model without you really losing the clients whom you have because of the change in the model? And yet you know that for you to serve them better, you need to change the pricing, the prices or the business model itself. How do you do that? Then the other class of question is around market saturation. First of all, is there a thing like market saturation? And when do you know that your market is saturated? Then what strategies can you deploy to adopt or to create, to pave a way? And you could bundle that response with some of the things, because I know you have exited, but also you could bundle that with your level of growth, like you've grown in the market or you want to scale either within the same country or want to scale out. So how do you make a decision on whether to do an acquisition or a merger or just go head-on competition within a new market that you are in? So what informs your decision and how do you really carve that so that you have a smooth sail where you are going to go and pivot? And this would be well answered by MFS, especially because I know you did some of the acquisitions. So what informed those decisions and how and what other options are there? Thank you. Sorry, many questions.
So let's see how many of those we can answer. Or shall we see if there's any one more in the room? Any other questions? You can raise your hand. Maybe let's start with those. Let's see how many of those we can answer, and you can choose to pick any of those questions between yourselves.
Maybe I'll start. And first of all, in the interest of transparency, the test that you have referred to is called MFS Africa. That's up purely payments. I'm sure. So when you're talking about partnerships and acquisitions and equity and all that, I can only say that I hope you're wishing us well, because we are MFS Technologies here in Kenya. So I just wanted to just make that distinction. We get a lot of that confusion. But they are primarily a payments platform. So let me start with these questions, which are very pertinent actually to where we are, at least in our ecosystem, with regards to dealing with pricing. And pricing is a very tricky thing that even till today, 10 years down the line, we still continue to grapple with. And the point being that okay, for the customers that we have had a long relationship with for the last 6, 7, 8 years, I think because of continuous value addition and those conversations that really seek to try, and I keep saying, remove friction from some of their processes, you'll find that it's not such a difficult conversation to have. They're used to you. Nobody wants to really make that much of a change. You're serving each other well, and so on and so forth. But the point is that new customers, now when we start looking at pricing, today I say that all the things that we started doing 10 years ago, today have become very commoditized. And so what we have is lending, loan management applications commoditized, payment systems commoditized, agency banking or mobile banking commoditized. You can get them very cheap. The developers are there. Guys are, as Karanja said, you give even for free. Hoping that somewhere along the line you'll be able to generate. So the whole point is that when we're dealing with pricing, the first thing is, in fact, what we're finding a lot of over the last 2 to 3 years is that we're probably providing the platform or the solutions for free in the beginning. And and we are letting the customers consume those services for a period of 3 months, maybe up to 6 months. And then we get to an understanding as to whether there's value addition. Have we been able to see traction on both sides? And are we on a path to generating revenue? Secondly, what used to happen before, again, those 8-10 years ago, you come with a, let's say, a loan management application. Because there were no players in the market, you could actually sell the technology for a significant consideration. Those days, it was not unheard of to sell what today would be a basic loan management system for $1,000, $200,000, even $300,000. No problem. Today, that's impossible. You're lucky even if you'll get to $5,000, for instance, at least in our field. So the pricing discussion is, it's really a give and take. Again, it's really around what your particular business model is. For us, we have really chosen, and we decided this a very long time ago because we didn't want to get into situations where we have to keep dealing with people in procurement and things like that. We don't sell technology. We just get into some transactional revenue share of some sort, and we both understand what our both partners understand what their roles and responsibilities are with regards to driving up transactional volume to the benefit of all of us. So that's the way I can look at it from our side. The second question that you've asked is also very pertinent. How do you pivot, right, from one business model to another, especially when, maybe there's a lot of competition that's coming through, maybe there's a requirement for change in pricing and things like that. And I can just give you a very practical example of very recently, where we've had a customer, again, who we've been with for a while, but what happens is that maybe management changes, okay? The guys who are running IT change, or maybe the CEO changes, or the CFO changes, and they come also with their own sort of like ideas about how they want to impact in that particular financial institution. They can come and say, oh, but look, you're working with these guys, we can see what we pay them on a monthly basis. Don't you know that technology has changed? We can get this done much cheaper, for instance, right? And I've got a vendor in mind, I've got somebody to work with in mind. So then what you find is that now, it's a race to zero. Let me put it that way, because okay, maybe to unwind you from that particular integration or whatever service that you're doing it may not necessarily be very easy. But if it means that they need to manage their costs, and the CFO or the CIO, whoever it is making the decision, believes that that's in the best interest of the company, then you're going to have problems. So what we try to do is to see where constantly, if you're having constant conversations with your partner, then where else can you add value? And sometimes what you're going to find is that the area where they've got a problem that you think could be addressed, you may not necessarily have the technology in your stable. You might not be the subject matter expert, but I know Andrew or I know Karanja, who is probably stronger in that particular area. So what kind of collaboration can I get into with Karanja? Bring him to the table, and let's see whether we can sort out this other customer. So you start to add value, and all of you are somehow in some transactional kind of like beneficial relationship. So for us, partnerships is very, very important, because you can't develop everything. You can't build everything for everyone. The model is changing. As you're saying, pricing now is becoming very tight. How do you add value to this other guy? So you see whether you can create partnerships and work on that. And then you mentioned something around market saturation, and of course these things of acquisitions, maybe when to sell equity. That one I'm going to leave to Karanja, because he's the one who has actually had experience around that. See, why did he sell his company? Why did he decide it was time? As we're still trying to build value there. So I hope I've been able to answer at least your first two questions. Thanks.
Okay. Around M&A, whether it's you looking to acquire or you being acquired, or bringing in new shareholders. Again, it's kind of like what we were talking about a bit earlier on the partnerships of what are you after? Okay, if it's growth you're after, if it's geographic growth, then you're looking for somebody who can help you do that. If it's revenue growth, if it's like what Fred has said, we have an existing customer, we are having problems retaining them on the current services that we are offering them. There's margin pressure, but they have this unique problem that they are looking to solve. We don't have the technology in-house. Can we go and acquire it? So you can partner or acquire it. So M&A, what I've found I've done it twice, is basically it's around about the seller and the acquirer is what are they looking to put into their stable, or what does this particular transaction do for them? Okay. And there's a lot of content online nowadays that will explain to you how to think about M&A, whether it's somebody coming to acquire you or if it's you going to acquire. Just to touch on the market saturation, I used to think the same way. Okay, a market is saturated, and then when I came across this jobs to be done theory, it changed my way of thinking. And the market is never really saturated. It's an offering the solution to the problem. It can get saturated, but what you're looking for is a new solution that's better, cheaper, faster than the existing one. So the market will always exist, right? But the products are what are. So the example that is given a lot is if the market is listening to music. If you think about music, it is listening to music. If you tried to enter the iPod market, let's say the digital music player market, you'd think it's saturated because there was the Apple iPod and all the rest. So Spotify can't exist. But if you think about it in terms of what's saturated is the solution, but the market of listening is still there. What it's looking for is a better, cheaper way to do it. Then there's always room for new products, yeah, because the market and that job basically exists. So my advice is take a look at all the content online around done, because it helps reframe yourself when you look at markets and stuff like that. What Fred said about pricing, I never ran into pricing because all the deals we did were revenue share. Which is connected again to value of partnerships. If you're very clear as to what you're bringing them, and the tech is helping the top line, the conversation really is about what percentage of that extra growth or whatever do I get. If you're the partner bringing the tech and they're, let's say, the consumer facing side of the company, like the networks were, they are much better at pricing to their customers. And how you try and protect yourself is you try and embed yourself, kind of like what Fred said, as much as you can into the customer relationship. You will never own the relationship. That's the other thing to keep in mind, and understand the value that you're bringing on the table, but try and embed yourself into the customer relationship as much as you can, because at some point the rev share they're paying you or the price they're paying for your software, somebody's going to say, yeah, okay, it's a bit too much now. And then the process of let's do it internally or let's get you out starts, and that's a very uncomfortable place to be.
I think some fantastic insights there, gentlemen. And I just wanted to mention, back in the day, I think it was early 2000, when I heard you first speaking about revenue share, it was a completely unheard of concept, and now everybody is doing that. Everybody's thinking that way in terms of how they price themselves. So I think the message here is don't be afraid to think out of the box. I mean, that's why we are here. That's why we are innovators. I think we have time for one more question. Is one more question? If not, I don't see any hands up. I would just like to say a huge thank you, Karanja and Fred. I think this has been very insightful. Guys in the cohort, I hope this has been useful for you. Thanks again. This has been an amazing 1 hour spending time with you guys. So asante sana. I don't think there's anything else unless you'd like to have a last word as we sign off.
For us at MFS, and glad to know that there are also other people from outside Kenya. But for everybody on the call, any opportunities that you feel that we might be able to work on together, we like to expand our sort of like partnerships. We are online, www.mfs.co.ke. reach out to us anytime, and let's see whether we can help each other. We can provide technology, we can partner, we can offer solutions, we can work together. We just like to innovate and work together. So thank you for the opportunity, Andrew. And, glad to meet everybody on the call.
Thanks, Fred.
Just say thank you, Andrew, and wishing everybody on the call good luck as they continue to build their companies. And just to say something, as I was preparing for this, I took a look at the stats, like the recently released stats here in Kenya, the insurance industry, and it kind of baffled me that in an industry where demand has been created for you by the government, for example, motor insurance, where everybody's has to buy it. None of all the underwriters have an underwriting loss. So that was like, that pointed out to me there's a real opportunity for somebody to figure out why does that loss exist. And I think, and you look at the multi-billions of Kenya shillings that the loss is, I think there's a real revenue share opportunity there. So if somebody wants to pivot into that, give me a call. I think there's something there. Yeah, so thanks, Andy.
For sure. No, thanks, guys. Yes, and you're right you are. I think that's one of the reasons why this cohort actually exists, because of a couple of things. One is that we are woefully underinsured on this continent, and secondly, I think in the traditional insurance is very inefficient, and that's a huge part of the issue around some of these losses. There's a lot of fraud, all sorts of things that are going on. So I think there's a huge opportunity for the guys in this cohort. Again, thank you, gentlemen, for your time. I think it has been amazing. I don't know if there's anything else from the BimaLab management team that you want to say, but otherwise, I believe we are together again, guys, tomorrow, Thursday at 5 o'clock. We'll probably spend 1.5 hours and go a little bit into the science around selling. So thanks, guys. It's been great. Laura, you have something to say?
Yeah, I just want to say that thank you very much to the two gentlemen. It's been an amazing session. I believe many of us have learned a lot of things of what really happens on the ground, and we are very appreciative. And we look forward to, just taking the guidance that you've shared with us, and well done to the work you've done within your companies. I know that voice sounds familiar to the two of you. Thank you.
Yes, thank you. Thank you, now.
Thanks, guys. And have a very good evening, and we'll see you all tomorrow.
Yes.